what is the best way for investors to start? That's a great question. So it really depends on what your goal is, because this is a very broad question. Like this could be answered a million different ways. But for me, the goal is financial freedom, which comes from owning assets that generate you passive income that exceeds your expenses. That's financial freedom. When the money you got coming in passively is more than the amount that you're spending every single month. So for me, the best way to start for a new investor is what will lead me the most linearly to financial freedom, which is owning assets, right, that generate you passive income. So how can I be a better buy and hold investor, even if you don't start with buying and holding at the very beginning? It's sometimes hard for people, whether it's because of financial limitations, time limitations, skills, whatever. It's hard for them to just jump into, I'm going to buy real estate, even though if that's your goal, that's how I started, right? So like the way I started is what I would say is the best way for investors to start, which is buying and holding real estate directly, because that will lead you to financial freedom. If your goal is active income right away, right? Like I need money right away. I can't worry about passive income. I can't worry about, wealth in the long term. I need money now. That's like a main reason why I don't recommend people to use real estate as an active income source. That's why I really recommend you just keep your job, keep making your money. You're already doing hopefully well in that. Use that money and use that time to build the experience to become a good real estate investor, and then start with buying and holding real estate with a separate income stream, which is your job. But if you really need active income, if you have money, then you can lend money out to other investors to generate active income. That is a place to start, but you still need to know how to analyze a deal. So you're not giving someone money and then you end up giving it on a very bad deal, which happens way more often than it should. And you end up, losing your money. So like you could lend money out and then end up losing it, which really sucks. The other thing is if you don't have money, but you have time, you can wholesale real estate. You can go ahead and find properties that are under contract, or you can put properties under contract at a good deal and then sell that to someone else for $5,000, $10,000, $15,000, whatever. The better the deal, the more you can sell it for to the end buyer. So a wholesaler is finding a seller or an agent and putting that property under contract at good enough terms they can sell it to an end buyer, and they're making some money on that, like that contract that they're selling. I don't actually advise for either of those two as things to start. I just wanted to put those there as two active income sources that you could do. For me, it went straight into house hacking, small multifamily. So the first thing I did with good employment credit was find a multifamily property for my wife and I to purchase, live in one unit, and rent out the others. We did that. We've done that collectively 3 times. If we only ever did that 3 times, I'd have a portfolio of a 2-unit, a 4-unit, and a 3-unit ranging from Alaska to San Diego. I'd have around 7,500. Well, no, that's not true, because that includes my rental cabins. I'd have maybe $5,000-ish a month coming in every month passively. And I'd own like $2-ish million of real estate. So if all I ever did was house hack once a year for 3 straight years, I'd have $5,000 a month coming in passive income. And I would have a portfolio of around $2 million. That's a phenomenal way for people to start. They see that I have 60 rentals and like, how do I get to 60? Well, the best thing to do sometimes is just get to 1. Or if you're house hacking a small multifamily, a 2 to 4 unit property, then that is a phenomenal way to start, right? You're getting ownership, you're getting this experience, and you're getting some of the best financing available, because when you are house hacking, when you're owner occupying a property that is 4 units or below, you can take advantage of, a primary residence loan. There's VA loans, since I'm a veteran, or active duty service members as well. You get the VA loan. You can buy an up to 4-unit property with 0% down payment, right? There's gonna be some closing costs, but your down payment is 0%. That's for a VA loan. Not everyone has access to that, and that's fine. There's also the FHA loan, which allows you to buy property for 3.5% down, right? Or a conventional loan, which allows you to buy a property for 5% down, up to 4 units, right? You can buy it. There's 3 different low down payment loans that I just mentioned. VA loan, if you're a service member or a veteran. FHA loan, open to everyone. Conventional 5% down loan. Those are 3 very low interest, very low down payment options to get into deals. When you're also using a primary residence loan, right? Even though it's a multi-unit, so it's an investment as well as your primary residence, you tend to get better interest rate, usually 1% or more lower interest rate. So if like investors are paying 8%, you'll roughly pay 7% interest. Or if they're paying 7%, you'll pay 6%. So you get better interest on your loans when you're owner occupying it, and you get a lower down payment option, which makes it a really cool cheat code for investing, especially when you're starting out. And then you're going to be forced to be a better property manager because you're on site. You're going to oversee more of the management and the contractors and all that kind of stuff because you're physically there, you're physically present. It's not the best way to scale into a huge portfolio, but if you just did that, like if you're someone who has literally zero real estate and you learn the skills through buying and holding one of these 2 to 4 unit properties, you've already changed your entire financial trajectory. What I mean to say, like, that's why I keep trying to emphasize, I have over 60 rentals generating over 20,000 a month in income. You don't need to start there. I didn't start there. I had 1 2-unit property worth less than $200,000 that allowed me to live free. And once I moved out, generated me around $1,000 a month. That should be your goal. Stacking a bunch of those. The only way you get to, it's the phrase of like, how do you eat an elephant, right? One bite at a time. You don't get to 60 rentals and 20,000 in cash flow without getting one rental that generates you a few hundred, or 2 or 3 or 4, right? When you're doing this multifamily house hack that then generates you cash flow, and you just keep stacking those. That's the name of the game, is good deals and keep stacking those as much as possible. And then you'll do kind of what I did, I would assume, which is the first phase of my investing journey was much more like that, this house hacking small multifamily. And the second phase was leveraging creative financing, leveraging other people's money, so raising capital to buy deals. So now I'm getting deals using none of my own credit, none of my own money. I'm using everyone else's resources. I'm leveraging that and pairing them up with good deals. And I've been able to scale my portfolio from the house hacking of around 2-ish million to over 20 million through those advanced strategies. And that's really what the super investors community is for. Is like, how do we then scale that? How do we do the second part of my journey, basically 2022 to current day, which was very different than 2020 and 2021 when I started out. 2 distinct parts of my journey. There's like the more traditional route, the house hacking or just buying one property at a time using your own money, which is good, but it's not overly scalable, right? Because you're a bottleneck financially. You can only do like 1 owner-occupied property a year, roughly. Whereas I can buy as many creatively financed deals using other people's money as there are good deals available, right? As long as your team can handle onboarding and operating, you can handle that. So the best way to start for new investors, in my recommendation, is if you have the ability of income and credit, is to house hack a small multifamily. I was able to do it in Alaska, which is a very lower cost market, but very challenging, but generates good rental income, to a very expensive market like San Diego with $1 million+ property, 3-unit, that generates good income as well. So you can do it in various markets. It just, the more expensive the market, the harder it is to do. And the criteria is you need to have good credit and good income to get those loans on those assets. But there's great ways to get into deals at 5% down payment or lower. And to put that into perspective, the down payment, like the dollar amounts, if for $1 million house, and the majority you should not be buying $1 million property unless you're in a really expensive market, but like $1 million property, 5% down is $50,000, right? So like that's a lot of money, but that $50,000 will let you get into $1 million asset. For a 3.5% down, that's $35,000. And if you're a veteran or a service member, you get the 0% VA loan, which means your down payment is $0, right? There's still closing costs and all that, but it just puts these numbers into perspective, how much you actually need to save to get started. This is why it's such a massive cheat code, house hacking, small multifamily. When people ask me about creative financing, the first thing I ask them is their income and credit, because that could allow them to do kind of the best form of that, which is house hacking a small multifamily for a low down payment and better interest rate than everyone else in the market is doing for investment properties. So that's the best way I'd recommend people to start if they want to buy. But if they're not in the position in which they can do that, I have 2 other recommendations, which is A, to Bird Dog, or B, to Capital Connect. And let me expand on that. If your goal is to buy and hold real estate, the 2 skills you need to develop, there's only 2 inputs, like into a business, into a buy and hold business to get deals that you own. You need money for the deals. Well, you need the deals themselves, like identifying good deals. Then you need the money to acquire those deals. So bird dogging develops the skill set of finding good deals. Capital connecting develops the skill set of raising capital to then be able to buy those deals using none of your own money. So what bird dogging is, if you're familiar with wholesaling is that you find an investment property, you put it under contract, and then you sell it to an end buyer. Bird dogging is the opposite, similar concept, but the opposite. And when I was wholesaling, I was basically a bird dog calling myself a wholesaler. I was working with buyers first, saying, hey, buyer, what kinds of properties are you looking for? What specifically are you buying? Where are you buying? What size? How much are you looking to pay for these? All that kind of stuff. And then my goal was to find deals that fit within their buy box, and then to go and analyze a bunch of investments, talk to sellers, whatever, analyze the investments, and then get it to the end buyer. And I would get paid in the middle, similar to a wholesaler assignment fee or a bird dog fee. I'd get paid for finding these deals for them. The better the deal I found, the more money that I was able to make. But the main difference here is I'm working with the end buyer first and bird dogging deals that fit within their buy box. The reason why it's beneficial is you're wasting a lot less time because you already know what your end buyers want and you're building those relationships. And if you're strategic, you're bird dogging for people in the markets and the strategies that you want to own in as well. So when we need to turn the faucet on for you to buy, all you do is stop selling it to other people and you just buy those deals yourself when it's time for you to do so, right? And the other advantage is to be able to put great deals under contract and know if end buyers like it, you're going to have to get really good at analyzing investments. So you're developing that skill set of getting really good at analyzing an investment and knowing that someone who is a more experienced buyer than you will buy that property. So it gives you more confidence that your analysis in the market and strategy you're looking to buy is a deal that's worthy for an end buyer. So once again, it makes it that much easier for you to be the one to end up buying those deals after you've developed that skill set and then made some money in the meanwhile. This is if you're looking for more active income early on and developing your skills. I would recommend bird dogging for end buyers much more than I would recommend wholesaling the traditional route, or like even trying to lend. Like this is what I would really recommend is bird dogging for end buyers because of all the reasons that I mentioned. The other skill set is, right, we've addressed the way to get deals in your business, right? That's one of the skills you need is get good deals and analyze them, right? Make sure they're good deals for end buyers. The second one is capital. You need money to buy these deals. But if you're capital connecting, what you're doing is you're going to an end buyer who already has a deal in mind, right? You're connecting with people who are regular buyers and you're saying, hey, the next time we have a deal, can you let me know what you're looking for? And maybe I can find the money for that deal and you'll get paid in that or even some ownership opportunity, depending on what you negotiate with that end buyer. Basically, you are raising money for someone else's deal, right? So that is an obvious skill set because once again, once you develop that skill, then you can raise money for your own deals, right? This is why I recommend bird dogging and capital connecting, because all you're going to do later is once you get those skills honed down, then you just marry the two and you're more experienced. And now you're the one identifying great deals and then raising the money to buy those great deals. You're just bringing those inputs into your own business, not into someone else's. And capital connecting makes it a lot easier because if it's a good end buyer, they already have the deal that they want to buy. They already know the analysis of what they want to buy. They ideally have marketing material ready. All you have to do is talk to your network, talk to people you've connected with and say, hey, here's a proven buyer who's done 10 deals, who has, this is the deal that they're looking at right now. This is what they're looking for. And so you're not having to leverage your own experience. You're not having to create all of this extra work, all these extra things to then raise the money to connect to that deal. But you're learning from that process on how you're going to be able to do it for yourself. You're going to learn some best practices. You're going to develop the skill set, right? And by the time you've done a couple bird dog deals and a couple capital connect deals, once again, that's when you marry those skills. And now you can buy and hold real estate that are good deals without using any of your own money. You're just, instead of giving those resources to others for instant cash, you're going to keep those resources for yourself for that long-term wealth and passive income. Hopefully that makes sense. So if I was a brand new investor and if I was a brand new investor and I was just starting out and I had good credit and a good job, I would go and house hack a small multifamily so I can start buying and holding real estate as quickly as possible. Then what I did in my journey was then I started bird dogging for other end buyers in a market and a strategy that I wanted to do. For me, it was BRRRR properties like buy, renovate, rent out, refinance, and then repeat. I'm not going to get into the weeds of BRRRR, but like I knew I wanted to have a strategy in which when we put the money in, I'd be able to pull all the money back out or the majority of it out. So when I found buyers who were also looking to do that in markets that I wanted to invest in, and then found them deals that fit their buy box, which means I was getting really good at finding deals that were at a discount. Once they're renovated, we'd be able to pull all our money out, and the property after we take on new debt will still cash flow. So it's like perfect. So then when I needed to buy those deals, I was ready to hit the ground running, right? But I would start, if I was brand new, with credit and income, house hacking, and then developing your skill sets, since it's going to take you another year before you can house hack another small multifamily. That's exactly what I did. Like literally, that's exactly my journey. I have that on YouTube. You can see that is exactly my journey. That is obviously what I would recommend because it worked really well for me. And it just makes a lot of logical sense as well. If you do not have the ability to house hack small multifamily, or even house hack you could even house hack a large single family property and rent it out by the room. But if you don't have the ability to do those two things, you don't have the income or credit, then I would bird dog for end buyers that are proven buyers. For example, I mean, here's a cheat code, right? If you're in the free wealth, the real estate community or whatever, and there are super investors out there, right? My community of super investors, and they are proven buyers, right? And you want to help find deals that fit within their buy box, that's a perfect demographic to go to. Or if you know other investors that are regularly buying good deals, you want to be part of that, go figure out what they're looking for and help find deals and then analyze it for them and get paid and learn throughout that process. Or bird dogging, right, is the deal side, and then the capital side is the capital raising side and the capital connecting. Find end buyers who have deals that need funding, raise that money and connect it to their deal and get paid on that, or get ownership. You know, you're not going to get a lot of ownership, but get some ownership of those assets and learn those skill sets. So then when it is time, if you don't have the money or the credit, when it is time, you can combine your skills of finding great deals, ideally creative finance deals, and raising the money to buy those deals, and do that for yourself. I hope I said the same thing 30 times, 30 different ways. So I hope that nails it home of what I would very specifically recommend for newer investors to start, why I do not recommend newer investors to wholesale or lend unless there's unless you're very skillful in the lending that you're doing and you're very confident in your ability to identify a very good borrower and a very good deal, right? That's the caveat. You can lend, especially if you have capital, and get really solid returns, but understand that there's a lot of risk. If they don't perform, you could lose all that money. So be very good at develop your skill set, get educated on how to identify if someone's a good borrower, a good operator, right? They're a good buyer, good borrower, and if and that their deal is a very good deal. Both of those criteria should be met before you ever lend money to someone. The alternative, in conjunction to like lending money out for interest, you can also lend money out for ownership. So you can get partial ownership of these investments. That's a private money partnership. I would recommend that as well for newer investors, because now you actually have the asset itself, not just a fixed interest rate return. So that's a great way to get started in real estate investing as well. And I offer private money partnership opportunities all the time. So my partners, they don't just lend me money for fixed interest rate. They actually own the house, the property with me. And I have some very cool opportunities coming up where it's not, we're just going to own these. We're going to check out all the properties. We're going to run through everything, take photos, do a bunch of cool stuff to make the most out of the ownership of it. Because the idea is if you're trying to own these assets, it's one thing to own them silently and like build the wealth, but it's even better when you leverage that to then create content and open and share with others what you're doing. So then you can get more deals, more money, and all that kind of stuff. So I'm incorporating what my mentor Pace taught me, which is bring your borrowers or bring your lenders to your deals so then they can market themselves and create content. You guys all create content together. So that's something big I'm going to be incorporating moving forward with some of my capital raising. So I think I hit that one. I think I answered that one pretty well, hopefully. Oh, there's 2 comments. Let me check them out. Okay, Wesley said so for the real estate investing, when I said you don't need to be a real estate license, Wesley mentioned, as a former broker, I can tell you what you said is absolutely correct. So my recommendation, from an investor perspective, is in alignment with Wesley as a former broker, real estate broker. We're in alignment that if your goal is to become a real estate investor, getting a real estate license is probably a more net negative than it is a positive, because you don't need a license to become a real estate investor. And there's that time and energy that goes into it is not benefiting you to be a real estate investor. And you have to disclose that now when you're trying to get like more creative or off-market deal opportunities. So thanks for that, Wes. Patty mentioned, I've tried to buy a fourplex for a year to house hack. Hard to find affordable one, if not a VA loan, but still trying to. So it depends on what you mean by affordable. Affordable could mean that the monthly mortgage payment is a lot, and that's going to depend on the interest rate and the amount of debt that you're taking out, or affordable and like the down payment is too high. I don't recommend anyone buys and holds real estate unless they have more than enough for the down payment, and then at least an additional $20,000, $25,000 set aside for reserves for if and when something goes wrong very early in her ownership period. There's no point of buying a property and then not being able to perform on it. It's setting you back, not forward in your goals. So it depends on what you mean by affordable. I think either of those works. My thing is, if you don't have enough for the down payment, learn and then develop those other strategies. Be a bird dog, be a capital connector, build your capital, for that. Start being better with your personal finances. Not you in particular, Patty, but in general, be better with your personal finances. Make sure that you have more money coming in every month than you're spending each month, so you can build your savings so that you can house hack and make the down payment affordable. Or if it's the interest rate is too high, or the monthly payment is too high, then you need to find properties that can rent for more than what your monthly payment is, right? I mean, I guess there's really not I mean, you could leverage creative financing, all that, but you can't do that with like a house hack. Like a house hack, small multifamily, it's very hard to do that. We're talking about the traditional route of investing, and it's basically interest rate is what interest rate is. So the only way to reduce the monthly payment is to pay more in the down payment, which is not usually ideal, or get a slightly lower interest rate, or just find properties that rent for much more. It's kind of tough. Yeah, the down payment to get in is tricky. Yeah, I mean, I hate to say it, if you want to invest, you got to have money in some sense. Like if you want to be a buy and hold investor, you got to have the money to be able to do that. When you're leveraging advanced strategies like the Super Investor Blueprint, right? I'm teaching you how to find deals that are creatively financed. You're getting even better interest rates, and you're learning how to raise the money from other people, so it's not your own money. But you should still have your own personal finances right before trying to go down that route as well. It's more of an advanced strategy. Intermediate to advanced strategies is what Super Investors is for, as opposed to like the very basics. And in every scenario, you should always have some extra money set aside, because things will go wrong. They always go wrong. I mean, it's an investment, and they don't go wrong in the lifetime of the investment, but they just go wrong in the sense of this was an unexpected payment that I was not planning for this early on. The investment is still probably good over the long term, but in the short term, you need to have that money to take care of that. Otherwise, you're going to lose the asset, and now you don't get any long-term benefits.